Again, I think that banks, like alternative lenders, are going to go through the same sort of analysis, and they're going to make their decision about AM schedules based on, the perceived riskiness of the asset class, the perceived riskiness of the specific property in question, and, balanced against how much stress or strain or how much income that property is currently producing. The thing that's interesting is we're in a very interesting commercial real estate market right now. And a lot of banks, because of the dramatic increase that we've seen in interest rates over a relatively short period of time, have pulled back their lending activities dramatically. Mainly because, as we've seen, after an extended period of time of low interest rates, including like 150 basis points worth of rate cuts in as late as, March of 2020 in response to the COVID pandemic, we started to see dramatic tightening. And as you all know, the Fed has raised rates 11 times over a short period of time. And what that's done is it's put a lot of strain on commercial property owners, and it's put a lot of strain on banks, financial institutions, as we've witnessed in the failure of Signature Bank, First Republic, and some others out there. The reason being that a lot of those institutions had long dated assets. They had long-term mortgages on their books against their liabilities, which were deposits from individuals. And when rates started to rise, they were holding a lot of mortgages that had lower interest rates than current interest rates, which meant the value of those assets on a mark-to-market basis went down. And if you have no obligation or no need to repay liabilities when that happens, it's conceivable that you can ride that out. And you get repayments on those mortgages, you issue new mortgages at the new higher rate structure. But the liability structure of banks are deposits from individuals like you and me. And when individuals think that there's something amiss or that a bank is experiencing trouble or difficulty, a lot of times they panic and they demand their deposits back. And that's when you start to see problems at these financial institutions, because these institutions are then forced to liquidate some of these assets at a loss in order to meet the demands of the liabilities. So a lot of banks right now are not doing a lot of lending, because they're really trying to manage a lot of existing issues with their existing exposure to real estate.